This is on the 4 hour time frame. On the daily time frame, it gets even worse, right? As you can see, if I were to zoom out here on the daily time frame, look at all these cell walls that holy shit. Oh my God. Man, you know how many years I'm like, I gotta get off social media. And like there's like a period of just like positivity and like happiness and people are giving you good energy. And then there's always one fucking person that just says some stupid shit, and you're just like, you automatically lose hope and faith in humanity because it's so wild. Oh my God. All right, so starting off with crypto, I want to thoroughly educate you guys on the macro backdrop today that took place and unfolded. Crypto has shed well over $75 billion dollars from its total market capitalization, actually well over now, 105. When I was writing the report this morning was at 75 billion. Down on the day, we are now trading at the $2.3 trillion dark pool. Our XRP analysis has come into fruition, at least the bearish thesis that we had analyzed, the XLM thesis, and then same thing, Canton now coming back into the dark pool at around 14,801. Same thing, metal came straight down into the dark pool via our previous analysis, and then XPR is on its way. So I want to highlight on all of these things, but before we do that, I want to read thoroughly through this rant here that I went on, this tangent here. I want you all as members of this community to really understand the level of professionalism here that myself and Scalper bring to you all to achieve. And the average retail mindset is just so skewed to mainstream retail analytical analysis that has just saturated people's minds left and right with outrageous price predictions that never come into fruition and these Fibonacci theses and just all this crazy, sporadic, nonsensical bullshit. And in this community, it will behoove you all to understand why we do what we do in regards to the analysis that we put out. So I want to read this thoroughly for you all before we jump into the updated XRP analysis, taking a look at some levels. I want to also show you guys the order flow because I'm on my other computer. So we'll take a look at that. We'll take a look at what sellers did today, how they trapped buyers and broke the last line of defense that we have been talking about for literally some time now, right? We've been talking about the $1.27 range on XRP for literally months. And now the thesis that I gave to you all, where I said if $1.27 breaks, be prepared for a much lower fall on XRP because buy volume is likely going to translate and turn into more sell volume if those stop losses get run. And so we'll take a look at order flow today as well. And I'll actually show you guys the sell walls. I'll show you all the sell volume. And then that way, the people that are watching this recording on YouTube in the public eye can actually see what it is that we see here in this community, which is unprecedented. And you would think more people want to see or gain access to that. But for some odd reason, they have this type of mentality. So, of course, this is not to say we told you so. This is just to show that the levels that we give in this community are not our opinion. I feel like people on the outside haven't really realized that when I make a prediction or I have an analysis that I post on Twitter or YouTube, they just think I'm pulling it out of my ass or like making it up. No, I only give predictions or I only give analysis using institutional data, right? And so if I say I think XRP is going to go to $1.18, it's because our institutional software that we took 4 years and hundreds of thousands of dollars to build is telling us that, right? I'm not just like waking up and throwing a fib on my charts and thinking like, oh my gosh, if XRP goes to this level, it's going to be phenomenal. And so in this report yesterday that we had covered and in the analysis that we delivered to you all, you can kind of see this is the scenario that we were talking about. We were taking a look at XRP. I mentioned to you all that if it breaks that $1.27 threshold, we're likely going to start to make our way down into $1.18 as our next area of interest before buyers could possibly make an attempt to defend. All right. And so as of time of recording, that analysis has come into fruition. I want to explain thoroughly for you all why that is by reading today's report. going over the risk off backdrop. But before we get into that, let me respond to this individual, Vince Ward, who, again, I don't blame for having this mentality, but there comes a point in an adult's life, especially in an adult who's attempting to succeed in the financial markets, whether it's as an investor, a day trader, swing trader, whatever the case may be, where you have to shift from the average retail thought process to a professional thought process and why things happen the way that they do, and how people that are successful in the markets, like myself and Scalper, have actually become this way. And it's because we don't think like the average person. So, on that analysis that I posted yesterday, where I gave that breakdown of if XRP goes below $1.27, we're likely to see much lower prices. This individual ignorantly commented on this post and said, well, when you say it could go up or it could go down, you're always right, right? Logical retail thought process there. So my response professionally to this is one of the biggest misconceptions in trading and investing is that presenting both bullish and bearish scenarios means you are trying to always be right, when in reality, it's the exact opposite. The goal of a professional analyst is not to predict the future with certainty. The goal is to understand the probabilities and prepare for multiple outcomes before they happen. Markets are driven by thousands of constantly changing variables: economic data, central bank decisions, geopolitical events, liquidity flows, investor psychology, and unexpected headlines. Anyone claiming that they know exactly what will happen next is usually selling certainty in a world that does not provide it, which is exactly why 99.999% of retail analysts are wrong, because they marry biases. They tell you XRP is going to go to $1,000, and they don't actually understand the liquidity mechanics behind XRP getting to that price level, having to supersede a bunch of sell walls via institutional data that we in this community have access to. When experienced traders outline both bullish and bearish scenarios, they are not making excuses. They are creating a roadmap. If price breaks above a key level, they already know what opportunities may exist. If price breaks below support, they already know where risk may increase and how they need to adapt. This is called planning, not guessing. For example, pilots prepare for multiple emergency scenarios before taking off. Professional athletes prepare for multiple game situations before stepping onto the field. Traders should do the same thing with markets. Ironically, the people who criticize scenario based analysis are often the same people who become emotionally attached to a single prediction. They spend their energy trying to prove that they are right, while professionals spend their energy managing risk and reacting to new information. The market does not reward opinions, it rewards adaptability. The most dangerous phrase in trading, in my personal opinion, is I know what will happen next. The most profitable phrases are if this happens, I will do this, or if that happens, I will do that. One mindset is driven by ego, the other is driven by preparation. The trader who survives and thrives over the long term is not the one who predicts every move correctly. It is the one who remains flexible enough to adjust when market conditions change. That isn't being right all the time. That is being prepared all the time. So, to you all, from your mentor, don't let people that have this saturated mindset about creating if then scenarios in the market and understanding how to react to these scenarios make you think like you're doing something wrong. Because in reality, this community is part of the very small few amount of retail investors that are actually making an attempt successfully to trade these financial markets with the rising equity curve. And it shows every single day in this space, right? And so that was just my professional response to this individual. This is what I was talking about a second ago, where I was like, it's so mind boggling that you have like these randos that come out of the blue and think that they even have a small idea of who they're talking to, number one, or what it is that they're talking about. Because in reality, this individual had, they actually done their research on who I am and what I've accomplished and what I've built for you all. They wouldn't be speaking to me like this. They would actually be like, dang, I want to learn from this guy. I want to improve myself. I want to understand why he's always accurate, right? Instead of being like, oh, he's just saying he's right all the time. It's not ego. It's me trying to help normal people like this guy level the F up. But for some odd reason, I just don't get it why people seem to not want that help. To each his own, right? All right, so just real fast, let's go over the market landscape real quick. Let's take a look at the fundamental backdrop. MNQ still doing its thing, thriving off of the AI backdrop and the supportive economic data. We had resilience in the U.S. labor market, showing a strong labor market backdrop on the U.S. front. We know that that tends to lift future valuations of the U.S. economy, and so when I'm talking about risk assets and how they were risk off today, I'm primarily talking about crypto. We have gone over in previous reports how there's a separation right now between traditional risk assets like futures, stocks, so on and so forth, comparative to crypto that is more dependent on the liquidity backdrop of central banks, primarily the Federal Reserve. So, with that in mind, today, risk sentiment deteriorated sharply across digital assets as investors were focused to reprice several major macroeconomic risks simultaneously. Today's sell-off highlighted just how sensitive risk assets remain to shifts in Federal Reserve expectations, inflationary concerns, geopolitical uncertainty, and U.S. dollar strength. The primary catalyst today behind today's decline was the latest U.S. labor market data, which painted a picture of an economy that remains far stronger than policymakers had anticipated. Job openings surged to 7.62 million, which was significantly above expectations of 6.88 million and marks the highest level since November 2024. Although hiring activity slightly softened and layoffs remained relatively contained, the overall message from the report was clear. The labor market remains resilient, and there is currently little evidence of the economic weakness that would typically justify Federal Reserve rate cuts. Pause right there just to see if you all are paying attention. Do you remember Ron the other day in Zoom call? We highlighted the percentage chance of a rate hike probability this year. Does anybody remember what that percentage chance was at before I continue reading today's report?
50? Like 42%.
It was at 42%, right?
Right.
And if you all remember, I highlighted that if we see that percentage chance increase closer towards 50 to 100%, we're likely going to see a sell-off in crypto, correct? Right? So think about that today, because as we progress to this report, you're going to see that the odds, the likelihood of a rate hike after today's labor market data and comments from multiple Fed speakers over the past 48 hours has increased that probability, right? So again, why we touch on the if-then scenarios, because 2 days ago, we already talked about how if we saw that percentage chance increase or pop above 50%, we were likely going to see this scenario in crypto. So, for markets that have spent months anticipating a more accommodative monetary policy environment, this created an immediate problem. Strong employment demand suggests the economy continues to absorb higher borrowing costs, reducing the urgency for the Federal Reserve to provide additional stimulus. As a result, traders aggressively reduced expectations for near term rate cuts, triggering a broad reassessment of risk asset valuations, particularly crypto. The inflation backdrop, of course, has only amplified these concerns. Over recent weeks, inflationary pressures have begun creeping higher again, supported by elevated energy prices, resilient consumer spending, and ongoing geopolitical disruptions. Investors are increasingly abandoning the narrative that inflationary pressures are temporary. Instead, markets are beginning to price in the probability that inflation could remain stubbornly above the Federal Reserve comfort zone along much longer than previously expected. This shift in expectations has been dramatic. Market participants are now assigning roughly a 60% probability that the Federal Reserve may actually need to raise interest rates by January of next year rather than cut them. So I highlighted that in bold for you all because I think it was 2 days ago, maybe Sunday or Monday. I think it was Sunday's Zoom call. Ron had highlighted when we were talking about that 42% chance, and I mentioned, right, risk assets like crypto would likely suffer if this popped above 50% or increased closer towards 100% probability that the Fed is likely to hike instead of cut. Just a few months ago, the dominant narrative centered around easing monetary policy and multiple Fed rate cuts throughout 2026. That outlook has now been significantly challenged. The consequence has been renewed strength in the US dollar. When investors believe that interest rates may remain elevated or potentially move even higher, capital tends to flow towards dollar denominated assets. Higher interest rate expectations increase the attractiveness of holding US dollars and treasury securities, often at the expense of speculative assets such as cryptocurrencies. A stronger dollar also historically creates headwinds for crypto markets because global liquidity conditions tighten. Investors become more selective with risk exposure, which is why we're seeing a more predominant inflow into assets like MNQ and S&P 500 because they are backed by the AI-driven narrative and the strength of the economy. And capital that might otherwise flow into digital assets often shifts towards safer yield-producing instruments. Adding another layer of uncertainty was the continued deterioration of geopolitical conditions in the Middle East. Reports throughout multiple sessions, Asia and London, indicated that tensions between the United States and Iran remain unresolved despite ongoing diplomatic efforts. Iranian officials warned that renewed hostilities appear increasingly likely while negotiations remain stalled with no definitive breakthrough as of time of recording recently announced. Simultaneously, conflict continues to spread across the broader region, with fresh reports of ceasefire violations involving Hezbollah and Israel adding to concerns that the regional instability could intensify. For financial markets, these developments matter because they introduce uncertainty into global energy markets. Any escalation involving Iran raises concerns surrounding oil supply disruptions, shipping routes, and broader energy security. Investors are particularly sensitive to these risks given that higher oil prices often feed directly into inflation expectations. If energy costs continue to rise, central banks may find themselves with even less flexibility to cut interest rates, creating a challenging environment for both equities and cryptocurrencies. This geopolitical uncertainty arrives at an especially critical time for monetary policy. Why? Because in just 14 days, Federal Reserve Chair Kevin Warsh will preside over his first Federal Open Market Committee meeting on June 16th through the 17th. The event is widely expected to be one of the most important macroeconomic catalysts for the remaining portions of this year. Markets will not only receive the Fed's interest rate decision, but also a fresh dot plot, which reveals where individual policymakers expect interest rates to move over the coming years. The significance of this meeting cannot be overstated. The previous FOMC meeting produced the most divided Federal Reserve vote since 1992. 8 policymakers voted to maintain current rates while preserving language that left the door open for future easing. So, at this upcoming meeting, I would almost guarantee that that's very likely to change. 4 policymakers dissented, arguing either immediate rate cuts or removing easing language altogether. That division highlighted growing uncertainty within the Federal Reserve itself regarding the appropriate policy path. Since that meeting, we have to understand that inflation concerns have only intensified, labor market data has only remained strong and resilient, and geopolitical risks have also continued to increase. As a result, investors are now anxiously waiting to see whether Warsh adopts a more hawkish stance focused on combating inflation or a more dovish approach centered on supporting economic growth. The uncertainty surrounding that outcome is contributing to today's defensive positioning across financial markets. For crypto, specifically, the combination of stronger labor data, rising rate expectations, a strengthening US dollar, and persistent inflationary concerns, along with unresolved Middle East tensions, create the perfect environment for a risk off backdrop. Capital flowed away from speculative assets as investors sought safety and clarity ahead of what could become a pivotal 2 week stretch for global markets. Looking ahead, we should closely monitor developments surrounding US Iran negotiations, energy prices, treasury yields, Federal Reserve commentary, and labor market data. Any signs of easing geopolitical tensions or cooling labor data that does not spark fears of a recession could help stabilize risk asset sentiment. However, on the opposite spectrum, if labor market data remains resilient and Middle East tensions continue to escalate further, markets may continue pricing in a more hawkish Federal Reserve, creating additional pressure on both crypto and broader risk assets. For now, the market's message is straightforward. Strong economic data may be good for the economy and the stock market as we're still seeing a good performance in Nasdaq and S&P 500, but it is not necessarily good for assets that depend on lower interest rates and abundant liquidity like crypto. With Warsh's first FOMC meeting rapidly approaching, investors are increasingly positioning for a potential move restrictive policy environment, and today's crypto sell-off reflects that growing concern. So that is why right now, in terms of the fundamental headlines, we are seeing a risk-off backdrop in crypto unfold. Real fast, just heading over to the order flow, taking a look at the XRP charts, just so you guys can see a realistic perspective All right. So again, think of all the bullish moon boy predictions that exist out there and all of the XRPs going to $1,000 in 2026 mentality that's unfolding in the ecosystem right now. When if we go to the 4 hour time frame, we can see just off in the immediate vicinity how many sellers or sell walls exist to the upside that we would need to see buyers engulf, trap sellers at, and become bullish above before we even possibly consider higher prices on XRP. And this is on the 4 hour time frame. On the daily time frame, it gets even worse, right? As you can see, if I were to zoom out here on the daily time frame, look at all these cell walls that holy oh my god. Holy crap. Oh, it makes me freaking have like butterflies in my stomach. It's so gnarly to see, right? So think about this from a realistic standpoint. Right now, we can see clear as day that sellers are fully in control of XRP's price at this current moment in time. Every single time that buyers have made an attempt to absorb sell volume and become aggressive, indicated by these, let's get a line going here. By these absorption lines, you can see that sellers simply just engulf them and create new legs to the downside. Most recently, we have seen that unfold where we can see all these buyers here. This is where we were highlighting that last line in the sand, that buy wall at around $1.27 has now recently been broken. And you can see that sellers engulfed all of the buyers. And just like we had annotated on the trading view charts, if we were going to see sellers engulf the buyers at $1.27, it was likely going to result in a buy squeeze to the downside, liquidating all of the stop losses that existed all the way back from the beginning of February, March, April, and in May. And now that is coming to fruition, full force. So, with that in mind, before we get hopeful that any meaningful recovery on XRP could unfold on the daily, the first area of interest that we need to see price flip back bullish above is $1.34, or where we recently saw sellers trapping buyers, throwing up sell walls, becoming aggressive, and breaking that $1.27 support. To the downside right now, the next buy wall doesn't come in until roughly around $1.11 on XRP. However, right now it does seem like we're experiencing some sellers profit taking at about $1.22. In terms of the dark pools, the next dark pool doesn't come in until $1.18 to $1.11. So I would go outright and say that if we cannot start to see buyers trapping sellers and start to push aggressively back towards the $1.34 threshold, then in the coming days ahead, we're likely going to see sellers prevail and continue to push price, trailing it lower and lower to at least $1.18 to the $1.11 threshold. If we break $1.11, there is another buy wall that sits at about $1.07. That $1.07 threshold, if it is broken, is most likely going to result in XRP's price tumbling down towards that dark pool at around 91 cents. I just wanted to show you all this real fast so that way everybody in this community can see how much effort buyers would really have to put in to push price back to even $3.13. Because let's say in a realistic scenario, buyers were able to overcome all these sellers that exist on XRP right now and break above all these sell walls. If we got all the way up to $3.20, and the passive seller that was previously aggressive, now passively possibly going to defend $3.20 to protect their stop losses, if they throw up more sell volume than buyers throw up buy volume, then what's going to happen? We're going to see buyers get trapped at $3.20, and everybody's going to get all super excited that price is going to go higher. But in this community, we know that if we don't see buyers engulf the sellers at $3.20 and we see them get trapped at this level, we should be taking profit, right? We should be unloading our positions on XRP that we were accumulating all the way down here and not getting hopeful that price is going to skyrocket to $1,000, right? So I'm just trying to give you guys that realistic perspective. This data right here puts things into a very realistic perspective, because even to get moderately hopeful that we're going to even push above $2, we have to break above 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 freaking sell walls before that even possibly comes into fruition, right? So just something to think about when you're watching these predictions on the internet. And, again, retail investors completely misaligned with reality, especially in the XRP community. I can't speak for other communities out there because I don't really see it. I don't really see crazy price predictions on any other assets except for XRP on social media. Nonetheless, real quick before we roll over to MNQ, okay, touching on just the dark pools. All right, so if you guys need to go in, update your dark pools, I have done so. So these are all the updated levels. XRP right now, next area of interest to the downside, like I mentioned, is going to be that $1.18 threshold. Right now, that's still on the cards. Unless we start to see sellers taking profit and buyers are able to push price back above $1.27, then that could open the door for a possible retracement back up into $1.34. We need to see buyers break above $1.34 and push price back above the 50 EMA before we get excited on any meaningful recovery on XRP's price. If we don't see a scenario like this where we start to see buyers pop back above $1.27, possibly taking price back to $1.34, then be prepared for much lower prices on XRP. $1.18 comes in at the next target. If we break $1.18, that $1.11 threshold is going to be the last line in the sand before we start to target the liquidity beneath these lows. Remember what I said to you all, though. I specifically said what I think is going to happen is that if we break $1.27, they're not going to leave behind this low from the beginning of February. We're likely going to see some type of cascading event that takes us below this level. So if that does unfold, I would not be surprised if in the coming days/weeks ahead, maybe as we head into the weekend, we see XRP price trade beneath these levels. If not, then again, be mindful, we could see buyers start to absorb sell volume at $1.18 and push price back to the upside. But before we become hopeful that that's going to turn into any meaningful recovery, $1.27 and $1.34 remain the thresholds that we need to see buyers break back above. To the upside, if we do break above $1.34, all these targets still remain intact. $1.46 to $1.62 would be good intraday profit taking areas if you do catch any good buy trades up into those levels if sentiment does recover. For now, I don't know why I just don't see that happening. I think that the markets right now, in my personal opinion, path of least resistance is to the downside. XLM still holding weight. We have come down into that 21-cent threshold that we had identified yesterday. Same analysis still stands. If we break below 21 cents, I'm expecting a much deeper retracement, at least down into 17 to 18 cents to respect the 50 to 18 EMA, or where previous resistance would likely start to act as a support if buyers can start to absorb some of the sell volume. If not, the next downside target is going to be a revisitation of that dark pool at the 14.23. I will start to accumulate some more XLM if we can break below 21 cents. To the upside, if we can defend 21 cents and buyers can make some formal recovery, we do need to break above the sell wall at 30.43 before we get excited. If we can break 30.43, that'll open the door for 37 to 41 cents. Canton. Damn, look at the accuracy on these freaking dark pools. It's so nuts. Canton just dropped from that 17-cent passive seller that has been defending price for some time that we have been covering, and they pushed price straight down into the 14,801 dark pool, where now profit taking is unfolding. Passive buyers are likely making some formal attempt to absorb some of the sell volume and defend at this level. If buyers can maintain price above 14,801, we could just continue to chop sideways in between 14,801 and 17 cents until some buyer or seller becomes aggressive enough to break either or of those levels. Below 14,801, the next area where I will start to DCA into Canton again comes into the 13,916, preferably below that at the 12,361.
Cypress, sorry, bro. I don't mean to interrupt you, man.
What's up, Ajib?
I don't have on the Canton, that's 14. I don't have those. I've got my next buy one at 12, bro.
The 13,916 and the 14,801 are dark pools from about a month ago that I still have on my charts.
Oh, I see, bro. Okay, that explains it. Thanks. Thanks,
And
brother.
the reason why I have not changed them is because they've still been playing a very major role in the recent price action, as you all can see. So
Got it. Thanks, bro.
until they're broken, Francois, I'll probably keep them on my charts. So just in case you haven't seen those dark pools are 13916 and 14801. And yes, the most recent update, the next buy dark pool doesn't come in until 12361. So make sure that you guys have those updated on your charts. Metal, super freaking accurate. This is insane for any people that hold or want to trade metal. This is crazy to see. Literally dark pool to dark pool. And what's even crazier, check this out. If you go over to my Twitter, look at this. Check this out. Let's go to my Twitter and let's find this metal post where I told everybody on metal to take profit. I know I did. I even shouted out the TDBN community, Aqua. I told them, I said, look, y'all, if the TDBN community wants accuracy, tap the F in. Here it is right here. May 24th. Look at the date. Let's take this where I was telling everybody on metal to take profit and let's bring it over to the freaking charts and let's slap it on right at the fucking local top from dark pool to dark pool. Look at that. That is crazy work right there. Like, oh my God. And people still doubt this community. Oh my, that is wild. Sometimes the level of the deltas and dark pools blows my own mind. Literally from 16,937 metal sold off straight down into 13,838. Phenomenal call out right there. To the downside, if 13,838 breaks, 11,555 is next. If we can see buyers start to defend at the 13,838, which given the current market environment seems highly unlikely unless some kind of formal announcement from Iran just comes out of nowhere, then 16,937 again becomes that most immediate upside hurdle. If we can break 16,937 to the upside, the next profit taking areas of interest that I'll be looking for are 18 to 21 cents. To the downside, I will start to accumulate some more metal if we can break below the most recent dark pool at the 13,838. Right now, XPR is kind of floating in no man's land in between two dark pools. What I will say though is I remember that there's a delta that is currently at this level. It's at like the 0.245. I just don't have it on my charts. So we are currently trading at the top of a buy delta right now. If we start to break the top of this buy delta, I don't have the exact coordinates of the delta. I just know that it exists at around the 0.0245. So it's like give or take roughly around here. If we start to trade beneath that, then we could definitely see the 0.02164 dark pool come into fruition. Anything beneath that, the next area of interest for XPR is going to be the 0.0136. Hopefully buyers can defend the 0.021 and we can start to see price action trade back in bullish territory. So right now, right across the board, all of the dark pools and the data and the information that we've been given to the masses has been extremely accurate. So again, make sure that if you guys are monthly access members, you're updating those levels. The best thing to do again is to be patient. Understand that crypto liquidity compared to a tradable asset class like NASDAQ is not as fast moving because there isn't as much volume traded through the asset class. So when you're trading these levels, I usually only pay attention to them on the daily. I'm not sitting there on the 1 minute time frame trying to scalp from dark pool to dark pool on XRP. I'm looking at them on the daily because from dark pool to dark pool, it'll take a couple of days for price to go from level to level. All right. So keep that in mind. So crypto out of the way. Let's